Hey guys, and welcome to another video. Today I want to tell you which ETFs I recommend you to buy and which ETFs I personally use. Choosing ETFs is not hard and is subjective, but there are some guidelines on which ETFs to avoid and what certain numbers provided with ETFs tell the investor. In the background you can see the Just ETF website. A website I also showed in another video, which is useful for comparing different ETFs on specific indices. What is an index? An index is a collection of stocks like a fund, but with lower fees, and it isn't really actively managed. It's provided by a bank, for example. The S&P 500 is provided by S&P, which is a bond rating agency. It consists of these companies which you can see in the background. Some are more present in the ETF than others, like for example Apple or software companies. But it also provides companies in other categories of business. So let's say you want to search for an ETF to invest in the S&P 500 index. You go to the website and you look for the index you want to buy. Like in this case the S&P 500, which is here. And then you can add some filters. So in this case I recommend you to use a long-only ETF, not an actively managed ETF, and to use as replication method full replication. Also you should use a higher fund size of let's say 500, but it doesn't matter that much. And you can now, what is accumulating and distributing? What's the difference? The difference is that with an accumulating ETF, the money you get from dividends, which means the money a company pays out to its investors when they make a profit, goes directly back into the ETF, which grows the ETF a bit more because it's directly invested. And you have, after a certain amount of time, you have more money on because your money also grows with the ETF. Distributing means you get the dividends paid out, like with stocks, for example. Which one do I recommend? I recommend you to use accumulating if you aren't planning on retiring soon, and maybe use distributing if you want to retire, because then you will get paid out like 2 or 3% of your money every year. So here you can see some ETFs to choose from, and for example you can use the wait, I have to search for the index again. S&P 500. Here are some ETFs you can choose from. HSBC, iShares, these are different ETF providers. I think I have the SPDR S&P 500 ETF. Wait, let me look. So you dollar cost average in in one or two different ETFs, which means you invest monthly like 100 euros in an ETF. Or if you can't invest that much, look at the order fees of your broker and invest less frequently, like every 4 months or even only every year, which isn't really dollar cost averaging anymore, but okay. Which other indices do I recommend? For German investors, probably the DAX, the German index, but that one won't give you as much profit probably. For international investors, you should look at your own country-specific index and evaluate if it suits your investment goals, or invest in the MSCI World. If you want to invest in emerging markets like China or India, you can take the Hang Seng index, which is the Chinese index, or you use the Indian index. You could also invest in smaller companies in the USA, for example, with a small company-specific ETF. And for European investors, you can choose either the DAX or the Eurostoxx 600. Let's shortly look at the performance of the S&P 500. In 5 years, you would have made a profit of 78%, and in around 10 years, we would have made 450%, which you can't really use for a measurement of future performance, but it kind of indicates a bit how much growth you can expect. even though the S&P 500 is a bit overvalued, so don't invest all your money directly at one time. Here you can see some information about the ETF. The fund size is 50 million euros, and you have to pay 0.07% per year, which is around 7 euros with 10,000 euros of a portfolio. You can also look at the listing date, which should the ETF should already exist a few years, in this case since 2010, which is more than 10 years ago. It's long only. Physical is the replication method, which means that the company has to own the shares of the ETF. It's based in Ireland. You can also look at the currency of the ETF, which is important for currency for currency. The currency of your country can differ a lot from the US dollar, so you should also buy a country-specific ETF in your own country's currency, like for example in Europe, a euro-based ETF with the fund currency of euro and European companies. Then you can you can look at the companies in the ETF. Almost 10% is Apple, and almost 100% is located in the United States, and the most important category is technology, but there are also some other categories. And you can look at the stock exchanges, where the ETF is listed, and here you can see the ticker symbol, which is important for people who have a broker account at Interactive Brokers, because you have to enter this brokerage ticker, this stock ticker, to find the ETF on Interactive Brokers. Like in this example, you would use, for German investors, you would use SXR8, or for American investors, this doesn't really matter. You could use like the SPY ticker symbol, which is also an ETF, but we don't have that one in Europe. And this is more for European investors, this website, because here there aren't really American stock exchanges featured on here. So which ETFs do I own? I own an ETF with the S&P 500 as index, and the DAX ETF, which is the German stocks index. And I think the S&P 500 is distributing, because I couldn't find a better one on Interactive Brokers, which had fractional shares and would be tradable in Europe. And the DAX ETF is accumulating, because it's better in that case. But you can also see that the S&P 500 ETF also outperformed the DAX, even though it's distributing, and distributing ETFs normally don't outperform accumulating ETFs, but the DAX isn't that performance intensive ETF. So compare different ETFs on just ETF. If you live in Europe, if you live in the United States, it's not that difficult to find a good ETF. You can use another site, but due to Interactive Brokers being mainly placed in the USA, you can find more ETFs which you can trade than in Europe. In Europe, you have to look at some of the ETFs which you can see right here, and look at the ticker symbols, and see if you can trade fractional shares, which means if you buy less than one share, like if a share costs 70 euros, for example, and you only invest 50 a month, you can buy 50 divided through 7 of one share, which is around 71% of a share. But that means you get 71% of the dividends, and it's not really a big deal, because you will eventually get more than one share if you invest long enough, and your shares will just add up. So you should use an ETF with fractional shares enabled, but you can also use some ETFs without you will have to invest more with the time, because if the ETF grows far enough, like if a 70 euro ETF grows to 300 euros, you would have to invest less frequently or more money every month, which wouldn't be that nice. So so you should try to pick an ETF with fractional shares enabled, not only for interactive brokers but also for different brokerage accounts, where many of them also automatically have it enabled for all their ETFs. Okay, that's it for today. If you enjoyed watching, please leave a like and bye.